Well, let's get across the market open now. Mark Garner joining us from MPC Markets. Mark, welcome to Monday. Now, over the weekend, we've had President Trump saying there's an agreement with Iran to end the war. Has largely been negotiated. He then said, you know what, we're in no hurry. What are we seeing in terms of the market reaction?
Well, as you know, it's like the boy who cried wolf, just on steroids, really. I mean, we've heard this every second day or third day, usually, after market or on the weekend, because, we all know that Trump watches markets pretty closely. He's very sensitive to the oil prices, etc. And I think just broadly part of the plan, to make sure that on a very thin Memorial Day trading, oil's opened up down 5%, equities have opened up 0.8% in the futures, and really the markets, well, particularly the US market, has honed in on the positive quite often, more often than not. So, I think the SPI was down about 0.7, but you would expect it to recover a little bit, after Friday night's fall in the futures. So, we'll probably have a fairly positive open, given that oil prices are down. And I believe there was 35 ships went through under Iran's naval escort over the weekend, so there is at least some oil coming through the strait at this point. So I suppose that is a little bit to be positive about.
Yeah, as you point out, we've heard this all before. So
yeah,
do you take a significant market position, or you got to remain flexible?
No, I think you just got to remain flexible overall. What the bond yields are telling us is that they're sitting at fairly high levels, particularly in the last sort of 6 years. And we've got, that we had yet another consumer sentiment number at 47, which is the worst on record since that number has been kept since 1950. And consumers were very much citing how much the extra gas prices at the pump were eating into their discretionary spending budgets, etc. So, Memorial Day is like the unofficial start of summer in the US, and it's when people tend to go on driving holidays, etc. We will definitely start to see the consequences of this Hormuz closure come through, because I don't think anyone at the start of this expected us to be, a week away from June, and we'd still be here in this exact same position. And then on top of that, the equity market at record highs. So earnings were pretty good, but a lot of it was based on upward valuations in Anthropic, SpaceX, etc. I think it was around about average overall. Whilst it was still a decent one, it's still backward looking, and it still hasn't had an enormous amount of that upward pressure on producer prices come into it as yet.
Yeah, so as we saw there, the Dow was up. It's finished at another record high there. Obviously, off the back of it, it fell into correction, didn't it, in March? So it's come back, given the earnings results, and in fact, S&P 500. I think about 90% of companies having reported, and according to LSEG, first quarter earnings are up 29% on the prior year.
Yeah, so 15% of that is those upward valuation revisions on those really large IPOs that are coming through, like OpenAI, Anthropic, SpaceX, etc., XAI. It's more around the 12 to 13% mark if you take those out, and we will see about probably 200 billion sucked out of the market in terms of when SpaceX and Anthropic and OpenAI list over the coming months as well. So, the money's going to have to come from somewhere, albeit 200 billion is not massive in the US. But those valuations are incredibly lofty, and whether they can maintain them on forward, on forward hope is another matter altogether. So we've got some software companies reporting this week, like Salesforce, Zscaler, and we'll probably see a few. I think we'll probably see a few of these software names, sort of, I guess, a bit of a moment of reckoning. ServiceNow early on was not a very good result, and it'll give us a bit of a an update on whether the SaaS apocalypse is real or not overall. So it'll be probably a fairly key week for some of our local software and tech names as well. So
well, in fact, let's bring the calendar up. What is ahead this week? Obviously, you mentioned those names. We've got some retailers as well that are due to report this week, and interesting given obviously what we're seeing with consumer sentiment too.
Yeah, it won't really affect Costco. I mean, it's one of the ones that's there, but we've also got some really big economic numbers as well. CPI here on Wednesday, and then core PCE on Thursday in the US as well. So we really are going to be on watch. We had Kevin Walsh sworn in over the weekend. Marcus now moved his expectations in the States of a rate hike at the end of the year now.
In fact, that was backed by commentary from, who was it? I'm just trying to think in terms of what they're likely to see. Christopher Waller saying, you've got to get rid of the easing bias and consider the next move is going to be up.
Well, yeah, basically, I mean, and that's like the rest of the world. Obviously, we've had to have this massive turnaround because of this inflation, and this AI trade is just overwhelming that at the moment. So, in the long run, with midterm elections coming up, in November, and this geopolitical issues still happening, and I think that uncertainty coupled with the economic numbers and inflation and rate expectations will probably overwhelm the US market at some stage. It'll just take a few cancellations of projects or one bad number from any of these AI hyperscalers, and I think we'll start to see some significant weakness to the downside.
What about the local market? What are you liking at the moment, Mark? I guess particularly, what are you seeing in the commodities complex at the moment? And I mean, if we actually do get an agreement, what are your expectations?
Copper's been looking really solid lately. I would expect sort of the uranium and lithium names, which were on an absolute heater prior to this conflict, probably that critical mineral space particularly, and I sort of almost put copper in that space now because it is just there is an underlying supply supply deficit, etc. Incoming, and we're going to need it for this data center build out, the energy transition build out as well. There is very strong willingness of the US to obviously lock down their supply chains. So I would see really positive, really positive flow of funds into those in particular. And obviously a resolution of this would make this situation mildly transitory rather than stagflationary. So I think it'll be really positive. I mean, our market we've had a number of issues. We've already sort of been hit pretty hard. I think if we see a turnaround generally in broader global markets, I think the US will have to lead to the downside. Normally they're the most resilient, but when it's all on, when it's all on the hyperscaling and the data center build out, which is 35% plus of what their GDP numbers are at the moment. We saw in Nvidia's numbers last week, half of their revenue is dependent on 7 or 8 companies or hyperscalers. You don't have to see too many of them scaling back the spend, and then all of a sudden you've got your biggest companies in the world leading the market down rather than leading the market up.